Hi, everyone. Chris Johnson with Monday Morning here. One company announcing earnings tomorrow, but you get two trades out of that. That's right. 2-for-1 trade on this retailer that's coming out. If you haven't seen it yet, we are right now heading into August 14th. The week started August 14th, and this kicks off retail earnings season. I know you've heard a lot about earnings season over the last 3, 4, 5 weeks here, but this is getting to the tail end, and this is where things get a little bit exciting. All the retailers are going to start to give us our results, and there's a lot of reason why you should be watching the next 2 weeks. First of all, it's really going to give us the pulse of the consumer. You've heard about the consumer. Remember, they said we were dead about, 3 or 6 months ago because interest rates were going higher. We were cutting back because of inflation. All of the things were getting us to spend less money. And certainly it was. But by no stretch of any type of imagination is the consumer dead right now. This next couple weeks is going to give us proof of that. Don't get me wrong. There are going to be a couple of earnings, and especially some of these specialty retailers that are going to kind of shake things up. But when you look at Target, Walmart, Home Depot, Lowe's, start going down the list, guys. Macy's, everybody's jumping in the pool. You're going to get a better look at how the consumer's doing, and I think it is going to surprise much of Wall Street. But I mentioned that there's one company that's going to be announcing its earnings this week, and it's tomorrow on Tuesday morning, that's going to set up 2 different trades for you. That company is Home Depot. That's right. The big orange signs, the big box do-it-yourself retailer company. The second trade's going to come from another little company called Lowe's. We'll get to that in a second, though. As I always like to set these trades up, I like to look at the walk down Main Street, the fundamental view of what's going on with the company. And the fundamental view has been good for Home Depot. I've got the chart here. I'm going to bring it up so you can see a little more of it as we walk through this. But think about where we were just 3 months ago. Home Depot came out and they missed on their revenue. So in other words, when they gave us their last earnings report, the amount of revenue that they brought in was lighter than Wall Street's expectations. Their earnings per share, that number that we all look at to say how profitable they were, it came in better than expectations. Now, just last week, I indicated to you that this is a trend that's carried its way through this quarter's earnings as well. So last quarter, they missed on revenue, beat on their earnings. This entire quarter, that has been the name of the game for much of the S&P 500. How much? About 85% of the S&P 500 companies have come in with earnings per share that were better than analysts' expectations. But if you look at the other side, we're down in the 60s in terms of the companies beating revenue. So missing on revenue and beating on earnings per share has been a trend that has continued through this earnings season. Why? Think about everything that was going on at the beginning of the year. Now, the number of companies that were doing cost-cutting measures. Guess when cost-cutting measures help a company out? When they're bringing in less revenue, but they still want to post a profit. They get their margins a little bit better, and that's exactly why we're seeing that trend. So let's go back to Home Depot. Last quarter, they missed on their revenue, the top line, how much money they brought in. They beat on earnings per share. And immediately the market went nuts and said that Home Depot has a problem selling their products. And sure, there was a little bit of a slowdown. If you remember, we were also coming out of a period of vast uncertainty with the financials getting shaken up. And a lot of people were thinking very instantly, hey, maybe I need to cut back on my spending. That was in February, and these were earnings results that we saw later in May. So it was a little bit of a story there, but there's also a bigger story. When we look at what's been going on in terms of business at Home Depot here lately, you can see 2 trends that are going to be listened to and I think heard quite a bit tomorrow and then again next week when we see Lowe's earnings, and that is the do-it-yourselfer. High interest rates have kept all of us in our houses. In other words, we don't want to sell our houses right now. We don't want to go out and do another mortgage at a higher interest rate. And we don't want to sell our houses right now because they're priced at a premium. If I sell my house, I have to go and buy another house or I have to pay for an apartment. Both of those are going to cost more money than they did a year ago, 2 years ago. So right now, homeowners are in a little bit of a mental block where they don't want to sell the home because they don't want to pay up for the next home. And They don't want to take out a higher interest rate loan because they've got those sweet loans from just a couple of years ago when we were down in the 2 and 3% range, right? So what are they doing instead? They're improving their houses, folks. And there's a kicker. The fact that we're not moving means that you've got home construction that continues to go forward because inventory is low and people are looking to buy homes. Now, how does this play out? Put these numbers in your head for a second. Home Depot, 10% of their base customers are contractors. They're the pros, the people that are building homes, the people that are finishing homes, the contractors out there doing it. They account for 50% of the company's revenue. 10% of their business or their customers account for 50%. The other 50%, well, that is actually you and I going in there and rolling up our sleeves and doing a project at home, of which we're starting to do more because we're staying in our homes. We're getting them ready to sell the next time around. I'll give you another number, and this is for Lowe's. They actually have 25% of their revenue coming from the contractors. So 75% is coming from folks like you and I. That's why we always hear that Lowe's is the do-it-yourselfer's place, because they get more of their revenue from people like you and I. But let's go back to that point that I just made. Home construction continues to move higher. We continue to see companies like Lennar, like Tri-Point Homes, like all of the companies that are building, even the smaller companies that are building these homes, continue to put holes in the ground and then fill them up with concrete, lumber, copper, and everything that makes a home. We've seen Lennar, L-E-N is the ticker symbol, that has continued to rally, and right now it's on a little bit of a break, pulling back, a healthy correction, but a continued bullish trend. Tri-Point Homes, TPH is your ticker symbol there. I just mentioned it, a similar pattern. These are all in the ITB. That's an ETF that I told you about 3 months ago you'd want to be a part of, and I still think you do because there is no inventory out there. But what does that mean for Home Depot that's getting ready to announce their report? It means that 10% that is generating 50% of the revenue has been busy for the last quarter because they continue to build homes. Something else that's interesting, the 50% of revenue that comes from my pocket and your pocket, the do-it-yourselfers, well, got a colleague that looked at some of the credit card activity on these two companies, and we've seen a continuation of an uptrend. That's right. The death of the consumer was perhaps reported a little bit early here. The consumer is showing itself to be a little more resilient as we've made our way through 2023, and I expect that to reflect itself in Home Depot's earnings that we're going to see tomorrow morning. So I'll get to the second trade in just a second because what I just gave you is a hint for that. Home Depot right now trading at $330. I like the stock again to make it up to $350. I think you'll get a little bit of an easing off of these levels because remember, we've talked about stocks being priced for perfection. Whenever you see a company that's trading right up at those highs ahead of earnings, especially when you see a rally, it tells us the market's got a little bit too optimistic about it and perhaps a little bit of a correction might be in place. They're going to sell the news is what I'm talking about. $320 is where I'd like to pick up Home Depot shares. And if things got really, really bad and the stock pulled back because the market also got soft at the same point, look at that 50-day moving average, which is right around $315. But there is more here. Let's look at what's going on with the other company that I've been talking about, and that is Lowe's. So if we can agree that everybody's out there trying to do things to make their house a little bit better so that when interest rates do come down, or maybe valuations come down just a little bit, you're going to get best dollar and it'll sell quickly. You go and you start painting everything and you add a deck or pavers or anything like that. As I said, 75% of the business from Lowe's is you and I. And we're out there doing this right now. We're busy working on those homes. The company last quarter, same thing. We had a good earnings report, EPS and revenue, and that's why we got a nice run higher from that earnings report, which was right there in May. You can see the pop higher, and then a little bit of sell the news, and then a nice move up to that $250, $240 level. Well, Notice the difference in the charts here. You've got a test of that 50-day moving average that I just talked about. A little bit of nerves, a little bit of anxiety from the market as we head into this earnings report. Support from the 50-day moving average, though, is a good thing to have right under the current prices. Let's play this out. Good news from Home Depot is going to get you a rally in Lowe's shares, while you may see a little bit of a selling the news on Home Depot. And it gives you about a week for a short-term play to the upside. Where do I think the stock is going to go? I do think that we'll see it take out that $230 level, move towards a $250 target, and that's from its current $225. So $25 increase on the stock from there. This is also going to set the tone for the rest of the retail sector. We're going to see companies like Walmart. We're going to see Target. Target's a hot one. You're going to be watching Kroger and a number of other companies that I watch very closely, as well as the specialty retailers. If you're looking for some excitement, that is going to be an area of the market, as companies like American Eagle Outfitter. Look at how much this has run. And again, another sign that the consumer has yet to really shut itself down the way that Wall Street's thought. These are the indications that show you you're in for a little bit of a surprise with the retail sector this next couple of weeks. So here's how I trade it. The Home Depot, I actually look for a little bit of a pullback from Home Depot after the report tomorrow. On the 15th in the morning, break down below that 20-day moving average, and possibly you squeeze down to the 50-day. But any good news is going to propel Lowe's in the opposite direction tomorrow as we move above that 225 and up towards a 235, 240 print on the stock from there. One earnings report, two trades, and if you don't want to play the individual companies, start looking at the XRT. We'll talk a little more about the XRT and other ETFs as we move forward, but opportunities abound here as well. Until next time, I'm Chris Johnson, wishing you the best trading success. Make sure you like and subscribe for more insight just like this. Have a great day, folks.